price of copper has increased by approximately 300% over the 2006 mean book price. The drastic increase in copper prices is attributed to several factors. Firstly, strong global economic growth, particularly in China, has led to increased demand for copper in sectors such as manufacturing, construction, and electric vehicles. Secondly, production disruptions in major copper-producing countries like Chile and Peru have limited supply and exacerbated the price hike. Thirdly, investors have sought out copper as a safe haven asset amid inflationary pressures and market volatility. Fourthly, the weakening of the United States dollar has made copper more attractive to international buyers, pushing up prices. Fifthly, the conflict in Ukraine and sanctions on Russia have disrupted global energy supply chains, leading to higher energy costs for copper mines and refiners. Sixthly, global supply chain disruptions and transportation bottlenecks have slowed down the delivery of copper, creating artificial shortages. Lastly, concerns about geopolitical instability in major copper-producing regions such as Chile and Peru have caused investors to bid up prices due to supply chain risk. Copper's importance stems from its versatility and widespread use in various industries. It is an excellent conductor of electricity and heat, making it essential for electrical wiring, power generation, and electronics. Its malleability and corrosion resistance make it ideal for plumbing, roofing, and industrial machinery. The construction industry relies heavily on copper for wiring, plumbing, and HVAC systems. The transportation sector uses copper in vehicle wiring, motors, and braking systems. The renewable energy sector uses copper in solar panels, wind turbines, and energy storage systems. The electronics industry uses copper in printed circuit boards, connectors, and semiconductors. Analyzing the factors influencing copper prices requires understanding the dynamics of supply and demand. On the demand side, global economic growth plays a crucial role. As economies expand, demand for copper-intensive products like infrastructure, consumer goods, and electronics increases. Emerging economies, particularly China and India, are major drivers of copper demand due to their rapid industrialization and urbanization. The transition to a low-carbon economy is also boosting copper demand. Electric vehicles require significantly more copper than conventional vehicles, and renewable energy technologies like solar and wind power also rely heavily on copper. The growth of these sectors is expected to further increase copper demand in the coming years. On the supply side, copper production is concentrated in a few countries, including Chile, Peru, and the Democratic Republic of Congo. These countries face various challenges, including aging mines, declining ore grades, and political instability. Production disruptions due to strikes, natural disasters, and regulatory issues can significantly impact copper supply. The development of new copper mines is a lengthy and capital-intensive process, which can take several years to bring a new mine into production. This limits the ability of supply to respond quickly to changes in demand. In addition to supply and demand factors, financial markets can also influence copper prices. Investors often use copper as a hedge against inflation, as it is a real asset that tends to hold its value during inflationary periods. Investment funds and speculators can also trade copper futures contracts, which can amplify price movements. Geopolitical risks, such as trade wars and political instability, can also impact copper prices. These risks can disrupt supply chains and increase uncertainty in the market, leading to price volatility. The energy crisis in Europe has also contributed to higher copper prices. Energy is a major cost component in copper mining and refining, and higher energy prices have increased production costs. Transportation bottlenecks and supply chain disruptions have further exacerbated the situation, leading to artificial shortages and high prices. The devaluation of the United States dollar has also made copper more attractive to international buyers. As the dollar weakens, the price of copper and other currencies decreases, making it more affordable for buyers in those countries. This can lead to increased demand and higher prices. The long-term outlook for copper prices remains positive, driven by strong demand from emerging economies and the transition to a low-carbon economy. However, supply constraints and geopolitical risks could continue to contribute to price volatility. The copper market is complex and influenced by a variety of factors. Understanding these factors is crucial for investors, businesses, and policymakers who need to make informed decisions about copper. Firstly, regarding the increased demand, strong global economic growth, especially in China, fuels demand for copper in manufacturing, construction, and electric vehicles. Secondly, concerning supply constraints, production disruptions in major copper-producing countries like Chile and Peru limit supply, exacerbating price hikes. Thirdly, regarding investment demand, investors seek copper as a safe haven asset amid inflationary pressures and market volatility. Fourthly, with the devaluation of the United States dollar, the weakening dollar makes copper more attractive to international buyers, pushing up prices. Fifthly, regarding the energy crisis in Europe, the conflict in Ukraine and sanctions on Russia disrupt global energy supply chains, leading to higher energy costs for copper mines and refiners. Sixthly, regarding transportation bottlenecks, global supply chain disruptions and transportation bottlenecks slow down the delivery of copper, creating artificial shortages. Lastly, geopolitical tensions like concerns about geopolitical instability in major copper-producing regions, such as Chile and Peru, cause investors to bid up prices due to supply chain risk. Copper's price sensitivity to various factors including economic growth, supply disruptions, geopolitical events, and currency fluctuations make it essential to monitor these factors closely. Economic indicators such as gross domestic product growth, manufacturing output, and construction spending can provide insights into the demand for copper. Monitoring production data from major copper-producing countries can help assess the supply situation. Staying informed about geopolitical events and currency movements can help anticipate potential price fluctuations. Understanding the dynamics of the copper market requires considering both short-term and long-term factors. Short-term factors such as unexpected supply disruptions or sudden shifts in demand can cause price volatility. Long-term factors such as population growth, urbanization, and technological advancements can drive sustained demand for copper. The copper market is also subject to cyclical patterns. During periods of economic expansion, demand for copper tends to increase, leading to higher prices. During periods of economic contraction, demand for copper tends to decrease, leading to lower prices. These cyclical patterns can be influenced by government policies such as infrastructure spending and tax incentives. Changes in government regulations can also impact the copper market. For example, regulations related to environmental protection, mining practices, and trade can affect the cost and availability of copper. Technological advancements can also play a role in the copper market. New technologies can improve the efficiency of copper mining and processing, potentially increasing supply. New technologies can also reduce the amount of copper required in certain applications, potentially decreasing demand. The copper market is a global market, with prices determined by supply and demand dynamics in different regions. Regional factors such as weather patterns, labor disputes, and political instability can also impact copper prices. For example, droughts in copper-producing regions can reduce water availability for mining operations, leading to lower production. Labor disputes can disrupt production and increase costs. Political instability can create uncertainty and deter investment. Understanding the regional dynamics of the copper market requires monitoring events and developments in different parts of the world. The copper market is also influenced by the actions of major players such as mining companies, trading houses, and government agencies. Mining companies control the supply of copper, and their decisions about production levels and investment in new mines can impact prices. Trading houses play a key role in transporting and distributing copper around the world, and their activities can influence price differentials between different regions. Government agencies can influence the copper market through policies related to taxation, trade, and regulation. The copper market is a complex and dynamic system influenced by a multitude of factors. Analyzing these factors requires a comprehensive understanding of economics, politics, and technology. By monitoring these factors closely, investors, businesses, and policymakers can make informed decisions about copper. Copper is a vital metal with a wide range of applications. Its price is influenced by a complex interplay of factors, including global economic growth, supply constraints, investment demand, currency fluctuations, and geopolitical events. Understanding these factors is crucial for anyone involved in the copper market. The demand for copper is expected to remain strong in the coming years, driven by the growth of emerging economies, the transition to low-carbon economy, and the increasing use of copper in various industries. However, supply constraints and geopolitical risks could continue to contribute to price volatility. The copper market is likely to remain dynamic and challenging in the years ahead. Careful analysis and monitoring of the factors influencing copper prices will be essential for success. The percentage increase of approximately 300% represents a significant surge in copper prices since 2006. This increase reflects the confluence of various factors that have impacted both the supply and demand sides of the copper market. The increase in copper prices has had a ripple effect across various industries and sectors. For example, the construction industry has faced higher costs for wiring, plumbing, and HVAC systems. The transportation sector has experienced increased expenses for vehicle wiring, motors, and braking systems. The renewable energy sector has seen higher costs for solar panels, wind turbines, and energy storage systems. The electronics industry has faced increased expenses for printed circuit boards, connectors, and semiconductors. The impact of higher copper prices has also been felt by consumers. The cost of goods that contain copper, such as electronics, appliances, and vehicles, has increased. High copper prices have also contributed to inflation, as businesses have passed on their increased costs to consumers. Governments have also been affected by higher copper prices. Countries that rely on copper exports have benefited from increased revenues. However, countries that import copper have faced higher costs. The increase in copper prices has also led to increased investment in copper mining and exploration. Mining companies have ramped up production and invested in new mines to take advantage of higher prices. This increased investment has created jobs and stimulated economic growth in copper-producing regions. The increase in copper prices has also led to increased scrutiny of the copper market. Regulators have been monitoring the market to ensure that there is no manipulation or unfair trading practices. Consumers have been demanding greater transparency in the copper market to understand the factors that are driving price increases. The future of copper prices will depend on a variety of factors. Continued strong economic growth, particularly in emerging economies, will likely support demand for copper. However, a slowdown in economic growth could lead to lower demand. Supply constraints could continue to put upward pressure on prices. However, increased production from new mines could ease supply pressures. Geopolitical events and currency fluctuations could also have a significant impact on copper prices. The copper market is likely to remain volatile in the years ahead. Careful analysis and monitoring of the factors influencing copper prices will be essential for investors, businesses, and policymakers.